Hi guys. On today's episode, we'll be talking about a data-driven approach towards trading. Okay, I'm going to be talking about trading sessions, how I use my own trading sections and why I use them, and how I was able to derive data to form my own personalized trading section, because my trading sessions are a bit different from the normal sessions everybody use. So I was able to get mine was basically extracting trading view data. What I did was very simple. I got the volume indicator, the normal volume indicator on trading view. So did this normal volume indicator. So then I downloaded the data, then went to Google Sheets or Excel, and I was able to arrange them in a certain order to get when volume actually peaks during the day. So I'm going to walk you through my data on Solana. I'm not going to be using my BTC data today, though I trade BTC mostly, but I'm going to be using Sol data for this case because the markets tend to move almost at the same time because crypto markets have what we call a correlation. So let's jump into it. So the first thing I did was basically after exporting trading view data, you can easily do that. Come into this side, export, then soup the data to Excel or Google Sheets. Then after aligning this data, I was able to convert this time because the time zone was not really UTC. I was able to convert the time zone to UTC. Then I went ahead to make a table, okay, for Friday, Monday, Saturday, Sunday, Thursday, Tuesday, Wednesday. After making this table, so the table has colors in them. So basically, the thicker the color or the thicker the color, the dark colors, okay, we have green colors here. The dark green color shows you that, okay, at this specific time, volume peak for the day. So you could see it from 12 a.m. UTC, the color here was a bit what? Thick, light green, but it's darker than most colors you're seeing on Friday. So you could tell them, okay, 12 a.m., this is when a new day starts. 12 a.m. UTC, this is when a new day starts. So we are seeing volume pick up. This is mainly what's around Sydney to Asian session. So we are seeing volume picked up initially, 12 a.m. and we could see volume peaked. It's peaked at what? Most times it's peaked at 1 a.m. or 2 a.m. What's UTC, but towards 4 a.m., 5 a.m., you can see how the colors are getting lighter, showing you that, okay, volume is dying down from the market and people are going out. But from 6, you could see, okay, the colors are coming back deeper now, and you can tell that, okay, more volume is coming into the market. So my first session for the day is the Asian session, which span from 12 a.m. to 6 a.m. UTC. Then I have another trading session coming. My London session doesn't begin 7 a.m. or 8 a.m. Mine starts from 6 a.m. Okay, UTC. Basically, when I see volume is picking up, you see that the volume died down towards 4 a.m., 5 a.m. So from 6 a.m., volume is picking up again. This is 6 a.m. Okay, volume picking up. You could see some certain days, like we have days like Saturday and Sunday. You can see the volume here is very light. On Saturday, usually there's no market activity because most of the institutions and banks are closed. So few people trade on Saturday. So what happened on Saturday is we have a very, very low volume coming into the market. So I don't bother trading on Saturday. We could just walk through Saturday to see Saturday's volume. Very, very what minimal. Most people were not trading on Saturday, but you could see Sunday, some certain time on Sunday, volume peaked. Okay. Towards like, 8 p.m., 9 p.m. on Sundays. You could see volume starts peaking 8 p.m., 9 p.m. You could see volume peak on Sunday evenings. But Saturday is usually what's very, very dried out and Friday is evening. So, you can see the day with the most volume for what we can say is basically Wednesday. You see Wednesday usually have one of the most volume days, Wednesday and Thursdays. You see how high volume was on Wednesday. Okay. So this is just in, let's say in descending order. So this was how I was able to make my own trading sections. Okay. 6 a.m. to 12 for London, and my New York session begins at 12. You could see 6 a.m. volume peaked. 6 a.m. volume peaked. Then from what? Around 10, we're still seeing volume in the market, but towards 11, it was like, just slowly what? fading away. Volume was what's going out of the market. We're not having so much volumes in the market. But from 12 a.m. volume peak. Okay. 12 a.m. is when my New York session starts. And we all know New York is the most volatile section because we're having most times when New York starts, we're still having London session open. So basically New York, London are intercepting. So we know New York is the time of the day, 12 a.m., 12 p.m., 1 p.m., 2 p.m. UTC is the time of the day where volume is peaking in the market. So basically, this is the New York session, and I will be taking you to TradingView. And so you just see how these sessions are aligned on my chart. So this is it. And this is my settings for my trading sessions from Asia, London, New York, close. Okay. Remember my time is UTC. So UTC, I'm not using UTC +1. I'm using UTC time zone. Okay. Basically, this is New York session. This is an indicator that in just what shows trading section on the chart, overlays it on the chart. This is New York, this is New York, this is New York. So from this you can easily tell that when we just maybe screen this with your eyes, you can easily tell that what New York is actually what's one of the most volatile sections. You can see how much movements we see in the markets during New York sessions. Now, there are some certain benefits I get from trading sessions that I'll be sharing with you. Not everything, but I'll be sharing most things with you guys on the call today. So now, first thing I want to let you know is I trade New York sessions. Okay. I trade New York sessions alone. And why I do trade New York session is because it's the most volatile section and we make money out of volatility in the market as traders. So we don't want to be trading a section that is not volatile. I don't want to be trading the time of the day where the market is not moving. So I prefer to trade New York sessions alone. Okay. Now I'm going to be sharing some other data with you that help me towards getting my trading system in place. Now, one of those things is daily highs and daily low. Now, we are all familiar that each day have its high and each trading day has its low. Now, most times where we have the London sessions comes in before the New York session. So most times when the London session comes and we have basically the high or the low of the day being put in by the London session. That is, this is a new day, Asian session, right? Then we have the daily low currently being put in by London session here. There's a high chance that New York will take the low out. Now, London session have the lowest, now I'm talking based on data, I'm not just saying this randomly. London session have the lowest chance of putting a daily high or a daily low in. And this is based on data I was calculated myself from TradingView and everything. So tested multiple session. Now London high taken out by days. Let's just go to the summary. Okay, let's go to the session summary. Come back to this, but let's just eyeball this for now. Let's just back test real fast for a month and see what happened. Now currently, yesterday, Monday was setting in the current, London was putting in the current daily high, but as New York session started, it sets a new daily high. Okay, London was setting the current daily high this day, but what happened? New York session came in and it sets the current daily high. Then on this day, which was Sunday, I don't usually count weekend to my calculation, so we'll be excluding weekend for this case. Then this is Friday. This was what? Thursday. Now on Thursday, London was putting in current daily high and current daily low, but we see New York session started and it's what took out the daily low from London, but London still puts in the daily high for the day. Okay, which happens, but not all the time. Okay, London can still set in daily high or daily low, but it's not reoccurring. Okay, so whenever it sets the daily high or the daily low, there's a high chance that New York session will take that high or low out. Now on this day, London puts in the daily high. New York session started and it took the high out and the daily high was set during the New York session. On this day, London put in the daily low because a new session started Asia, London. Then what happened? New York took out the daily low from London and New York sets in the daily low for the day. Now on this day, we have London putting in the daily low. New York took it out. Okay. We're seeing this happening. London sets in the daily session. This was Saturday though, but we'll still count it. Let's just count it for this case. London puts in the current daily low, but New York was not able to take it out. London puts in the daily low, New York took it out. London did not put in daily low or higher. Same in this case, same in this case, same here. Same here, same here. Okay, London put in the current daily high. New York came to take it out. London put in the current daily high. New York failed to take it out on this specific day. Now, on this specific day, we had something similar to London putting in the current daily high and New York not taking it out. So basically, we have this also. London putting in the current daily high. New York tried to, but it did not. Okay, now we've seen like 4 or 3 times whereby London is setting the daily high. Okay, this is why when you are using data to trade, you keep what's compiling data, you keep what's getting this data because the market is ever changing. There's nothing that lasts forever. Yeah. So you just have to adapt to your trading system. Know when your edge is fading out. Okay. So this is an edge that is working for me, but we could tell this particular week, it did not work so well. Okay. Then we have London putting in current daily low, New York taking it out. Then let's see. Daily high, New York took it out. Sunday, let's just leave weekend out of this. I'll prefer leaving weekend out of this. Network is a bit lagging. London putting in the current daily high, New York taking it out. London putting in the current daily high, New York took it out. Then, so you could just backtest this. London put in the current daily low, New York take it out. London daily low, New York take it out. So we could see, even with this, our little backtest, okay, London put in the current daily low, New York took it out. London put in the current daily high, New York took it out. So we just backtest for a month. And you can see, even in this backtest, we have more cases of what New York taking out towards Monday, London high of the day or London low of the day. Now for my data, from what I have so far, this is it. Okay. This London sets daily high. Okay. That is London high is greater than Asia high was what? 339 out of what? 44 of all days. Okay. The data I did was for about 700 and something days. So 757 days. So days London set in daily high was 339 out of those 757 days. Then days where the high was taken out was 241. That is 71%. So there's a 71% of what London high being taken out. There's a 71% chance of London high being taken out on the new trading day. Okay, if London sets in a current daily high, there's a 71%. Okay, anything above 50% is an edge in the market. So imagine having a 70% chance of something happening that day. So that gives you an edge you want to use. Then the days where the high held was 98 days out of 339. That is London puts in daily high and it was able to hold that high to the end of that trading session for the day. Then that was just 98 out of 339 days. That's just 28%. So which is what? A very, very low chance. You want to put your money, okay, on what is more likely to happen. So this is just probability. And we know that, okay, we have a higher percentage chance of betting that London high will be taken out by New York. Then days London sent in daily low was 295 out of what? These 757 days. Then that is 39% of all days. Then the days the low were taken out was what? 215, which is 72%. That is days London sets in daily low. Okay, London put in the daily low was what? 295 days out of the 757 days. And the days it was taken out, that is London put in the current daily low, but New York came, traded below London low was what? 215 days out of 295. So that is, it has a 72.9% chance of what's happening. So whenever we see that London is putting in the current daily low, we have a 72% chance of what? That low being taken out by either New York or close session. Then the days the low had was just 80 days, which is what? 27%. Okay, so you want to bet on what is likely to happen. Now, remember in trading, we never speak in what's absolute because there's nothing certain in the market. We trade uncertainty. So, but there are certain things that have what a higher probability of what's happening. Now, this is what days of the week highs taken. Now, we have some certain days of the week that the high is likely to get taken or the low is likely what to get taken. Now, on Wednesday, have the highest percentage chance. So any day that London puts in, okay, out of 757 days, London puts in the daily high for 108 Wednesdays. Okay, 108 Wednesdays. Now, London, out of 108 Wednesdays we have from our data, London sets the high for 56 days. Okay, out of 188 days. Then the high was taking 45 45 times. So something happening 56 times and was taken out 45 times. That's an 80% chance of what it taken out. So we know whenever we see London putting in daily high on Wednesday, there's an 80% chance that this high will be taken out. That we know that if it's Wednesday, there's a high chance of what this not what this high of London high what being what taken out. Then Friday 76%, Tuesday 75%, Sunday 70%, Monday 69%. So now for Monday, you know that okay, the percentage is not as high as 80 or 70. You know that for Monday, this chance of London high being taken out is just like 69%. Then Saturday, you have the lowest chance, which is about 58.7%. Now, we know when you see London putting in daily highs on Saturday, you don't want to bet on markets taking the high so much because it's just 58%, which is more than half. Okay. But at the very end of it, but you know, it's not as strong as 70 or 80%. So we can do days of the week for low. Okay. We can just do days of the weeks of where the high was taken and days of the week when the high were held. Okay. So Saturday was the highest day. So we could get that from this. Then we can do the same for the lows. Now out of 108 Tuesdays, Wednesday, Thursday, London puts in the daily low for 45 Tuesdays and low was taken out 37 times. So now on Tuesday, whenever we see that London is putting in the current daily half, it has about 82% chance of what taking it out. So now I want you to use this that I'm sharing my data out now. Okay, this is for BTC. This is not Sol like the other one I showed you for follow. This is for BTC. Now I want you to go back test this stuff yourself. Okay. This is the indicator I'm using for this. You could use either market session by Leviathan or you could use Los Algo sessions. Okay. Then set this using my session settings. This is it here. Back test it and see how you can impute this to your trading system. Now, you know, I trade, New York sessions because it's the most volatile sessions. How I trade New York session, we get into that in another video. So this is just a video introducing you guys to what a data-driven approach towards trading. Now, this is not the best trading statistics I have or trading data I have compiled and worked on, but this is just an introduction to you guys. And so you guys could get to see, okay, how I do things from my end and how you could easily replicate the same thing. Okay. So I'll be I've come to the end of this video. I'll be making another one. So just stay tuned to the channel. Make sure you like, subscribe, and share to your friends if you find this helpful.